Welcome to Talk Tickers. Today, we're diving into Black Hills Corporation's Q2 2025 earnings. They just posted some solid numbers, but the stock, well, it barely budged. So we're going to dig in and figure out the real story the market might be missing here.
So after the release, the stock ticked up just 1%. That's a pretty lukewarm reaction from the market, suggesting investors saw the quarter as solid, but maybe not game-changing.
And that really raises the key question, doesn't it? With good numbers on the board, what are people missing? And more importantly, where's the real opportunity? Let's start with the headline results. All right, first up, let's just get a quick snapshot of the second quarter numbers. Okay, so Black Hills delivered earnings per share of 38 cents, which was right in line with what analysts were expecting. But the real story here was on the top line, a pretty significant revenue beat, coming in at $439 million when the street was looking for something closer to $412. And that performance translates to a really solid 15% jump in earnings per share compared to last year. Now, this growth came from a few places, mainly new rates kicking in, plus some favorable weather. So, the core utility business is clearly doing its job. But let's dig a little deeper into how management is executing its strategy and really building on that strong foundation. And they are just methodically checking all the boxes. They nailed a key regulatory win in Kansas, which is going to add almost $11 million in annual revenue. Big projects like Ready Wyoming are moving along right on schedule. And maybe most importantly, they confidently reaffirmed their full-year guidance. That tells you they see a clear and stable path ahead. But here's the thing. That steady, regulated utility story, it isn't the main event anymore. The real growth engine, and honestly, the part of the story I think is being massively underappreciated, is the booming demand from hyperscale data centers. And you don't have to take my word for it. The CEO, Lynn Evans, was crystal clear on the earnings call. The pipeline for this tech-driven demand is absolutely huge, and it's getting bigger. This isn't just some side hustle for them, it's becoming a central part of their future. And if you want to see what that looks like in the real world, check this out. Their utility in Wyoming saw a mind-boggling 21% jump in its peak load year over year. That explosion in demand was directly from data centers and blockchain operations coming online. This chart just illustrates the trajectory perfectly. Right now, they're serving tech giants like Microsoft, with Meta building a new site. But look ahead. By 2028, these data centers are expected to make up over 10% of the whole company's earnings. And beyond what's already forecasted, the pipeline could more than double that load. It's a massive ramp-up. Okay, so this is probably the most critical point. The company's already strong 4 to 6% long-term growth guidance. Well, that's just based on their core plan. It doesn't even include the full potential of that 1 gigawatt plus data center pipeline. Any new contracts they signed are pure upside, completely on top of their existing solid growth forecast. Now, of course, with this kind of explosive growth, you've got to ask about the risks, right? And it looks like Black Hills is taking some very smart, proactive steps to make sure everything stays stable. Operationally, they've now implemented a public safety power shutoff program across all their electric utilities. This is a huge deal for any utility out west. It's basically a critical tool to help mitigate wildfire risk, which is always a top concern. And on the financial side, there's this number 55. They just marked their 55th consecutive year of raising their dividend. For investors, that kind of track record is an incredibly powerful signal of financial stability and a real commitment to returning cash to shareholders. So what does this all add up to for the stock? Let's bring it all together and give you our final take. So, given this huge potential for the market to suddenly wake up and re-rate the stock once these data center deals get signed, how could an investor get positioned for that potential upside? Now, here's one speculative idea, using long-term call options, also known as LEAPs. The thesis is pretty simple. You're making a bet that the market is still pricing Black Hills like a boring old utility. By using these LEAPs, you get exposure to all that potential upside if, or you could argue when, a big hyperscaler announcement forces the market to see this company for what it's becoming, a key player in tech infrastructure. So here's how we see it. We expect the core business to keep delivering solid, inline results. But the real catalyst, the thing that's really going to move this stock, is going to be news about them converting that massive data center pipeline into actual contracts. Because of that huge embedded growth option, we're assigning an outperform rating. So that's our breakdown of Black Hills Corporation's Q2 earnings. And as always, just remember, this is not financial advice.